Hey everyone, welcome back to Corporate Decoder, the place where we find out if the company's latest report is a slam dunk or a face-it plant. Today, we're diving into SLM Corporation's latest SEC filing. Get ready because this is not just about numbers, it is about what those numbers really mean for its future. Before we jump in, if you love unlocking the secrets buried in these corporate documents, smash that subscribe button. And hey, we've got a fantastic community brewing over on Discord. Link in the description below to join the conversation. Alright, so SLM Corporation, also known as SLM, is back with some important updates. It is January of 2026, and they are letting us know about their financial results and some big decisions. First up, the company has shared its financial performance for the end of 2025. This usually gives us a picture of how they've been doing over the last few months and the entire year. It is like getting the report card for the company's academic year. Now let's talk about something that often excites investors, share buybacks. SLM has announced a new share repurchase program, the 2026 share repurchase program. Okay, for up to $500 million of its own stock. This program is set to kick off right away on the 22nd of January 2026. It is interesting because they also mention their existing 2024 share repurchase program is still active. That one had a capacity of $650 million and is set to end around February of 2026. So they're essentially signaling a renewed commitment to returning capital to shareholders. This new $500 million buyback program isn't something that will happen overnight. They expect it to stretch out over about 2 years, finishing up in early 2028. When a company buys back its own stock, it can do a few things. It can increase the value of the remaining shares because there are fewer shares out there, potentially boosting earnings per share. It can also signal that management believes the company's stock is undervalued, which is usually a good sign. They're also telling us the various ways they can actually go about buying back these shares. It is not just one method. They can do it on the open market through tender offers, or even in big block deals. They're using different strategies to make sure they get the best value. This flexibility is key because it allows them to adapt to market conditions. However, it is important to note that it is not a promise that they will buy back the full amount. Management has the final say, and it all depends on things like how the stock price is doing, the overall economy, and if they're following all the rules, especially with their existing debts. Companies always add these kinds of disclaimers to protect themselves. But it means investors shouldn't automatically assume the full $500 million will be spent. These important announcements, the earnings results, and the share repurchase news are detailed further in their press release, which is furnished as Exhibit 99.1. You can think of this as the official announcement detailing all the points we've touched upon. It is where they lay out the full story behind their financial results and strategic decisions. And to give a more visual and digestible overview, they've also put out an earnings presentation. This is usually a slide deck that breaks down the key financial metrics with charts and graphs, making it easier to understand the trends and performance. It is a great companion to the press release for anyone wanting to dig deeper. Now, let's talk about what this all means. SLM or SLM is a major player in the student loan market. They've been navigating a complex financial landscape, and these reports are crucial for understanding their health and direction. The decision to authorize a substantial share repurchase program, especially when the previous one is still in motion, suggests confidence from leadership. They're essentially saying their stock is a good investment and they want to reward their shareholders. However, like any company, they face risks. We'd usually look at the risk factors section in a more detailed filing for a full picture, but generally companies in this sector are sensitive to interest rate changes, regulatory shifts, and the overall economic well-being of students and their families. If the economy struggles or if regulations tighten around student lending, it can directly impact SLM's business. Looking at the numbers we can infer here, the share buyback is a strong indicator of positive cash flow and a belief in future profitability. It is a classic move by established companies when they don't have immediate high-growth investment opportunities. They then choose to return that excess cash to shareholders. The fact that they are announcing a new program alongside reporting their 2025 results means that their 2025 performance was likely strong enough to warrant this. We would expect to see strong earnings and possibly a healthy balance sheet supporting this move. So to wrap it up, SLM Corporation is signaling a period of confidence and shareholder returns with this new $500 million buyback program. They are also providing their latest financial results, which presumably support this strategic move. It is a positive sign. But always remember to look at the detailed financial statements and risk factors for the complete picture. Alright, that is our breakdown of SLM Corporation's latest filing. What do you think about their stock buyback plan? Does it make you more confident in SLM's future? Let us know your thoughts in the comments below. If you found this analysis helpful, Please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next one.